Hi there. Very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session here on YouTube. And as promised, live around 2 to 15 p.m. Got a little bit late because was preparing something for all of you, and this is with regard to the PE of a stock. So I will discuss as to how a PE of a particular stock is, you can say, uh, set out by the market, although it is a very relative term in nature, but I will try to envisage as to what are the major four reasons due to which the PE of a stock is ended upon. The second point here is I will answer your queries and kindly use the super chat and super sticker feature, so that will help me. That will help you get out answers from me in greater detail. We'll not talk much about the market because it has not done much over the last few days or so. So we'll discuss about this PE factor and answer your queries as well. We'll spend more time in answering your queries. So let more people join in as it's a Sunday. So would hope to see more people online to come online and come in this live session, and then I'll begin with the session in earnest. Uh, I hope all of you are doing well with your investment and with your trading. Uh, most of you might be making a lot of money, those who have been sticking with their guns and sticking with their stocks over the last 15 months or so, since April of 2020. So over the last 18 months or so, the stocks have done appreciably well, and most of you must have made a lot of money. So if you have a very short term view, I would suggest that that people should try to take out money and probably book out of their positions. If you have a 6 months to 1 year view, then I would suggest hold on to it. If there are declines, if you have the money, buy more, or if you don't have the money, then probably just stick to whatever positions you have. So that would be my suggestion to all of you who are even trading in this market. Will answer your queries once I finish with this PE discussion, and will answer all your queries that come up, especially those from super chats. Uh, One more thing and a request to all of you, that whoever is watching this live feed, kindly do subscribe to my channel, hit the bell icon with the all notification, because subscription, you can say subscription base is extremely less of mine, and you would have seen that. And although I don't put much heed to it, but I would just like to tell you that the subscription has reduced appreciably over the last month or 2 months, coming down to only 180 per month. So that's around 6 or 7 per day. So there must be people who are not subscribing and watching a lot of my videos. So kindly do that. It would help me grow the channel here as well. So that's my request to all of you. Also, to all the patron members, thanks a lot for all the support. Those who are not members, still get in touch and try to be a 1 month member. Take a 1 month membership there with $10, and you can always delete the membership by the end of the month, say 29th or 30th of the month. So those people who want to exit the membership can do it by the end of the month, 29th or 30th. Those people who want to take the membership can take straight away, especially those who want to take the 1 year membership, and you will get access to my portfolio, whatever changes I make to my portfolio, my trades. uh, all 25 stocks will be visible to you, whichever I feel that those other stocks that are going to do well over the next 6 months, and they have done very well. And those people who are on Patreon can be, you can say, they can be witness to the fact that most of those 25 stocks have been doing well over a 6 months period. So there's a watch list there, plus I give long-term short-term calls out there. So you can be a member there, be a $10 member or be a 1 year membership by paying only around $8 per month. So that is also a 20% discount to you. And you become a member there for 1 year by paying $100. That's by paying for only 10 months. So become a member there. You will gain a lot, and if you are not able to gain a lot, then you can always exit Patreon membership there as well. That helps me grow the channel as well as sustain my livelihood and continue with better informed videos. So that got me to the level where I was able to compare some of the companies and was spending time in trying to find out which companies need to be compared. I also want most of you to tell me as to which are the companies you want comparison on. So I'll make those videos. So whatever comes up, if there are 8 or 10 comparisons that people come up with, which are common, I would definitely would be making videos on the same. So if you want comparisons between any two companies, kindly do write in the comment box, and would do that hopefully in the coming weeks. So I hope you're liking that feature that every Saturday you're getting a comparison video as well, albeit not at a very detailed level. I'll try to make it even more detailed going forward, and that's why I need more support through Patreon, so that I can spend more time on stock analysis and finding out best of the stocks for all of you. All right, so let's begin the session. It has been around 6 minutes. Hopefully, more people will join in the interim and can watch the recorded feed as well. So, I would like to discuss with you, and there have been queries on the same, that how a PE of a stock is come about, or how does a PE being put on to any kind of stock. So say something like a DMart is trading at 120, 130 times, but something like Steel Authority of India trades at 10 to 15 times, and it looks expensive. So why does uh, what is the issue that there is so much of you can say divergence between the PE of all the stocks, and even stocks in the same sector have a different sort of PE. So what is PE at the first place, and then we'll try to find out as to how do market come about giving a P to a stock. So the answer lies in the statement that I have just given. Basically, PE of a stock is a market perception of a company as to how much a market is willing to pay for a 1 rupee, say a 1 rupee EPS increase, or 1 rupee, you can say, earnings increase. So if a company gains 1 rupee in earnings EPS, say for instance in a DMart, which is I think is trading at 120, 130 times, say 120 times. So a market or market participants or investors are willing to pay 120 rupees extra for every rupee that as an EPS DMart generates. Now, that is why people think that DMart is extremely expensive. On the other hand, if you look at some of the companies in the textile sector, say a smaller company like Nitin Spinners a few months back, not at the moment it's trading at 18, 20 times. But normally over the years, it has traded at between 8 to 10 times. And I remember my first of the investments have been in Nitin Spinners in 2012-13, which I took out after a year and a half. So basically, it's a textile company, and it used to trade at 8 to 10 times. Even though it was growing well, it was having good ROEs, etc., everything, but yet the market gave it, say, a 10 times. So the market participants or investors were willing to pay 10 rupees extra for every rupee that Nitin Spinners was making, whereas a market was willing to pay 120 rupees extra for every rupee that a DMart makes. So why is there so much of divergence? That is the question. If anybody knows the answer, kindly write it in the comment box. They can pause the live session and probably write it in the comment box. And then in what I feel are the reasons, I'll put that together, because you need to understand one thing is that the market's perception of a company or a stock or a sector is completely different to what you think, and that is where the divergence lies. And if you believe that a company is trading at a lesser PE than what it should, then you're going to make a big money if you are correct over a period of time. And that is how Normally, I buy stocks. Me and my friend buy stocks that its PE is less and it should command a larger PE. I'll give you example later on, and it's a very, you can say, common example that I keep on giving, so you might have guessed it, but I'll give that example as well here. So let's go back to the example that we are talking about. So one is in the textile sector, say a Nathan Spinners, the other one DMart into the retail sector. Now here lies the difference on many parts in with respect to the PE and how it is come about and everything. So there are majorly, which I've thought about, are four factors that are extremely crucial for a company's PE to be high or low. First of all is the sector of a stock. It is not about the promoters, it is not about anything else. Yes, there could be a debate that okay, promoters are also something that is a big thing when you decide a PE of a company. But the first thing is the sector of a stock. Now, if you look at different sectors, there is consumption, pure consumption like FMCG, etc., or consumer companies which are into food products. So food products companies like Nestle, etc., or Hindustan Foods, or for that example, even Excel, smaller companies, larger companies, anything. All these kind of food companies command a different sort of P. Then you have consumer companies which are into electronics. We are seeing two companies at least, Dixon and Ember, into electronics, and there are other smaller companies, TVS Electronics and other companies which are into hardware manufacturing and so on and so forth. And that is one of the sector. Then there is a sector that is into cement. Then there are sectors which are more commodity driven, in which you have or cyclically, like some of the sectors. So we talk about textile and then metals. So we have 4 5 sectors lined up here. So let's go one by one. So when I talk about these consumer sector, and let's add to it companies like DMart, which are into mainly consumer products, which are eatables that they sell in their malls, etc., and they sell at very high ROE. So when we consider that a company is trading at a higher or a lower B, we have to look at the sector per se. There is a sort of a range of a P in my analysis and experience over the last decade, that there is a range of PE given to every sector. So for consumer sector, it is between 70 80 to 120 130 at the moment. Or if you talk about bear markets or markets which do not do well, we talk about 2011 to 13 market, we talk about 2017 18 market, 18 19. In that period you can say 50 to 70 times. That is where the you can say consumer sector is normally given a P, a lower P. A higher P would be 120 130 times, which it is given today. Okay, but that is not the same PE that is given to a sector which is, say, a textile or metals. A textile sector normally trades between 8 to 12 times, maximum 15 times, and normally trades between 8 to 10 times. Yes, when there is a bull market, and we have seen that there are a lot of things going on in the textile sector with the PLI, etc., and that's why the PE has run up to 15 20 times. Now, most of the naive investors or new investors might think that okay, it is trading at 20 times, it is growing at 20 30%, so it should trade at 30 40 times. But it would might not happen. In most of the cases it will not happen. What will happen is those people who are invested into these stocks from around say when the stock was trading at 8 10 PE will start to get out when the PE goes to 24 25, because they will understand that a normal PE for a textile sector or a metal sector is around 8 to 10 times. So you have to understand that sector wise the PE is completely different. So hopefully you'll understand that consumer sector commands a different PE, electronic sector. So any sector that has a lot of moat, what I mean by moat, that has a lot of potential going forward, say 2 3 4 years down the line, not 10 years or 15 years, but 3 years down the line, is going to make a lot of money, and the companies are going to make a lot of money. They will have a very high PE at the current level. And that is where you need to understand that an IRCTC, a disclaimer, I have the stock IRCTC is trading at 100 times or 120 times current EPS. But you need to understand that the growth would be huge once things completely open up, and we are very close to completely opening up with the higher vaccination, etc. It's a very good travel play, and that's why there is heavy buying in the stock. Of course, there will be corrections, but the PE will remain high as long as the growth remains in a consumer kind of a sector. And IRCTC is a consumer centric company after all. So I hope you have realized that PE for each sector is different, because the growth in that sector remains stagnant in some of the sectors, and whereas in other sectors the growth keeps expanding, as in the consumer sector or in a company which has been producing higher ROEs, and I come to that, and is also into the consumer domain. So that's one point. The second point in this space is that the growth rate. Okay, now the growth rate is also essential. So if you, and that's why I keep on saying that it's better to buy any consumer centric company, because the market will always give higher PE to these types of companies, to these types of sectors which are more consumer centric, because India is a consumer driven economy which keeps growing when consumer starts earning more. So when we go further than that, so a DMart trades at 120 times. What are the reasons? I'll just uh, note that down to you. One is the sector itself. It is into the consumer domain, selling all kinds of products and selling at higher margins. And when we talk about margins, we talk about the growth. So the growth rate has to be so what happens is, if the growth rate is 30% or 40%, say a growth rate is 35% CAGR for the last 2 years in terms of profitability, and it looks like it will continue to be at least 35 to 40% for the next 2 to 3 years, then what would be the PE of the stock? The PE of the stock would be at least 70, at least. How does I come to that, you can say, figure? I came to that figure because normally a very good company that is growing at a very decent pace, when I say very decent pace, it means more than 25-30%, then its PE is normally double to its growth, double to its immediate growth of the next 2 3 years. So immediately, a company growing at 30-35% CAGR on profits should be at a PE of 70. If it is trading at a PE of 35 or 40, it's a multi-bagger straight away. If all things are normal, if promoter pedigree is there, if the company is selling big, if the sales are okay, everything is fine, it's trading at 35 times, growing at 35%, it should at least be double in very, very quick time. So it should trade at around 70 times. So that is where 70 P of you can say DMart comes about. Now where does the P increases in that sense? So two factors, the sector and the growth rate, takes the PE up to 70 rather than 20 or 30 in a case of DMart. The third thing is promoter pedigree. Okay, and I would add a fifth thing in it. So the four I said was stock sector, I told about growth rate, I talked about promoter pedigree and prospect of business, how the business is going to be in the future. And I would also like to talk about the free float of the stock, or how many large investors are invested in the stock. That is the fifth point. So let's come to the second point. The second point is about growth rate, which I have just explained. But in a similar vein, in a textile company, if the growth rate is going to be 25-30% and is trading at 10-12 times, then at most what will happen is its growth rate will double to, or its PE will double to 20 times. Its PE will not go to 50-60 times. Why? Because its PE already was reduced by the market to around 8 to 10 times. So this is all market perception. So if the PE of the sector is around 8 to 10 times and the growth rate doubles, then the PE will double to 20 times. It won't go 4 5 times to 50 times. It will trade at 50 times. It's selling a lot and this and that. It will go to 20-25 times. And when the growth rate comes down, it will go down again. For very few companies, or selected companies, when the growth rate expands rapidly, even in sectors like textile or metals, etc., and they go up sharply, then only you will see the PE expand even further. Otherwise, it's very dangerous to buy these sort of companies in these sectors at these PE or higher PE, because normally what happens 90% of the time is that the growth slows down, because these are cyclical sectors. These are sectors which are more uh, you can say either environmental related or cyclical in nature completely. So the PE will reduce very sharply and the stock will fall vertically. But in consumer, what will happen is that a PE that I explained, 70 of a DMart, will increase further. So 120 of DMart may become 70, 80, but will not go to 10 or 15. Okay. So two factors I have described: stock, the sector of the stock, and the second is the growth rate. The third is promoter pedigree. If the promoter pedigree is top class, we have seen that in Dixon, with the kind of backing Dixon has with the Motilal Oswal, and the promoters itself, and the way the promoters speak about the company, etc., and how the results come about, that is completely in alliance and all. You look at DMart with the promoter, Mr. Radhakrishnan Damani, and so on. You look at Tata's, TCS, etc. You look at Reliance Group, retail. I would say Reliance consumer businesses all, or you can look at Nestle, etc. All these have higher PE because of promoter pedigree as well. So you increase the PE by at least 20%, at least 20 to 25%, just on the fact that the promoter pedigree is top class. So what will happen is that 70 PE will go up to 90, to 85 to 90 easily. So that goes up to 85, 90, or so on and so forth, because of the promoter pedigree. And if the promoters are iffy, if there are issues with the promoter, I won't like to name a company, but in smaller companies, one in the railway division, there are other companies in the consumer domain also, which are growing well, but the promoter pedigree is iffy. We have seen what happens with Future Consumer. Even when it in their heydays, it used to not command a very high PE, etc. So what happened was it collapsed later on. So if the promoter pedigree is top class, then you will end up seeing that the PE will expand even further, and the market will give a very high premium to it. And then so that is why 90 PE of a DMart comes about. Now, how come it is trading at 110, 120 PE? And people talk about it being it's expensive, but it has been trading at 110, 120 PE. So that comes about through the prospect of the business or the business cycle. So what is happening currently is that even in a downturn, even when all malls are perhaps shut, most of the malls were shut over the last 2 years, and most of the businesses of the same retail division were not doing well, DMart has come out with 40-50% growth regularly, even in a complete, you can say, shutdown kind of an environment. That tells you that how the growth would be once things open up. So 35-40% growth currently could easily go up to 50 to 60 times when things completely open up, say from FY23 or 24 onwards. So if you are saying 55, say 55% growth on such a high base, then you double that up, it comes to 110 already. And then you include the promoter pedigree, you include other parts, it's easily 130, 140 times. And that is why it is trading at such higher PE. Or if even if you take 40 to 50% growth, it should trade at around 120, 130 times. So that is where this PE comes about. These are the four major factors on which the PE really comes about. The fourth one, as I said, was the prospect of the business, how the business is going to perform. Now let's take example of a metals sector where there is a chance that the business will perform very well for a year, year and a half. Then you talk about consumers, say a Nestle, etc., where you know that once things open up, they'll sell more from the stores. So the sales will only grow going forward as more kids are born, more Nan Pro, etc., their other brands will be sold, and this business will continue to generate a lot of ROE, a lot of cash. So this PE will never reduce. Same goes with Asian Paint. Same goes with Pidilite, and the PE keeps on expanding because it keeps on producing 25-30% regularly. You remember that formula in your school about compounding. So when something compounds at 27% CAGR, it doubles every 3 years. So something doubles every 3 years, it could be huge over 10, 12 years. And that's why most of the market participants give a higher PE to these kind of companies. And the final point I want to make here, the video has gone slightly long, but I hope you are able to just stay with me and able to understand. The final point I want to put in here is the free float and an amount of, you can say, investments or holding that promoters FII DII have, that also has a bearing to the PE of a company. Now in the case of DMart, I think at least 90-92% of the shares are either with the promoters or with high net worth individuals or with pedigreed individuals, all those big large investors that we always talk about on channels, etc., or with high net worth individuals, etc., and only 7-8% is are with you can say a public. So even if the stock falls, it's not going to fall a lot. Even if the whole of the, you can say, public shareholding goes down and everybody wants to sell it, it would go down 10, 20, 30% maximum. And that's what happened with Asian Paints, for example. It fell from 2000 to 1450. It fell something like 20 to 25% in a complete, you can say, massacre, when the market was having a massacre from 12,400 to 7,500. So that is where the pedigree of a stock comes about when the market falls big. So these are the five major factors. Promoter holding and holding of HNIs, FII, DIIs also matter a lot. How much free float is there matter a lot, and that is why stocks like Nestle, etc., do not fall a lot. That is why a stock like even Dixon is not falling a lot, because large investors are invested in it. A stock like DMart is not falling a lot, and there are many examples. So hopefully now you'll understand, although these are not the only factors, but these five factors go a long way in you can say determining what a PE of a company would end up being. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel and help you also ask me questions and eke out answers in greater detail. All right. Thanks, Mahadevan, for your contribution. I love your support at Patreon. Thanks a lot. Well, you're welcome, Mahadevan, and you all at Patreon are the, you can say, lifeblood of my, you can say, going at YouTube and the way I'm doing work on YouTube and everywhere else. I hope to bring better things for all Patreon members. Okay. A very good company, Nuclear Software. Buy more around 570, 560 if you get a chance to buy. Okay, and that's why I keep saying that it's better to ask me questions through super chat, super sticker. You can do that through Google Play as well, because a lot of questions just go by and I'm not able to answer them. There's a lot of queries that come about on the right hand side window of mine. SBI Life, HDFC Life, both very good. Keep on holding if you don't have. If you have it, if you don't have, buy it. If you have it, hold on to it. On any declines, keep on buying onto the stock. All right. Nestle, yes, around 20,000, 18,500. Again, it's a buy for long term. It's like a, you can say, an investment bet over 8-10 years, not a 1-2 year play, or you'll make a lot of money there. But over 8 years, it's going to generate a lot of wealth for you. I don't have any comment on Oriental Aromatics. I have to look at the stock and only then tell. Okay. Newgen Software is a good company, can buy at these levels and hold 3 years, will make good returns. You can buy SHIL now if you have a 3 year time frame. Don't buy if you have a 1 year time frame. It could go up and down, but over 3 years it's going to be big. I think it can easily double in 3 years. SHIL, disclaimer, I have the stock in my portfolio, so that's a disclaimer. MRF, I would say, is expensive. I think rather than buying an MRF, you have other stocks like Asian Paints or Pidilite, or even some chemical companies like SRF on declines. Naveen Fluorine, etc., rather than buying into an MRF. All right. What else? Astral Lores. Okay. So you have asked Shalaj a number of queries. I'll just answer about Birlasoft. At around 390, 400, it's a buy. If you want to ask so many queries, become a member on Patreon and I'll answer every day one query on the same. High energy batteries is good. You have to be patient. Say you cannot just buy a company and think that you'll make money in it in 3 4 months. I mean that is what is being happening in the market, but that doesn't happen. Always, it's a very top class company. Yes, of course, it can go down. It has run up a lot. It can definitely go down, but it's better to probably wait and buy. If you cannot handle 20 30% fall in a stock, then probably don't buy it. Clean Science is a good company if you have it. Don't buy at these levels. I think the valuations are stretched. You have bought it at 1600. It's fine if you have bought it at lower levels, but don't buy now. On very bad days of market, then you can buy long term. It's a very good story. Clean Science. I would stay away from most of the finance company, Muthoot Finance, etc. I would not like to probably get into them. PJ, thanks for your contribution. Sequence Scientific, can we buy? What is the issue with the company? The issue with the company is that the last quarter results were not good. In fact, were bad. Next quarter, they have said that their you can say API business not doing that well. Next quarter could also be bad, and that's why the stock is not moving. But hopefully, from December quarter onwards, things will look better. So you can accumulate here, but there's always a chance that the stock will go to 210 200 levels, and that's where you need to buy big probably. Over 3 4 years it should do well, PJ, but yes, in the short run, over 6 8 months, you could be in a situation where the stock may do nothing, may not fall a lot, may not go up a lot. Both MGL and IGL are buys even at these levels. I think MGL is has consolidated a lot. These are good levels to add. If you have it at lower levels, buy it. If you have it at, sorry, hold on to it. And if you have it at higher levels, hold on to it. If you have the money, you can buy more and average out here as well. All right. Uh, I don't know why subscription number is not increasing. Maybe you people are not subscribing to my channel. That's all I can say. I'm trying my best to help all of you, and hopefully, see, whatever I say on YouTube or on Patreon is from my heart, and whatever I say is very genuine, and hopefully most of you might have understood that. And I don't want people to lose out on anything, even if it means not telling you about all the stocks, but I tell you about, and I can say that plainly, I have an inclination towards consumer centric stocks, and that's where I make more of my videos, because that is where my pedigree is. So I'm just being honest on the channel as well as on Patreon, and hopefully more people inshallah will join in the coming months. Gujarat Gas is a very good company, Mr. M. Rain Industries, I'm not that sure, but Gujarat Gas over long term should keep on making you money. Less valuations at the moment are stretched, but hold on to the stock if you have it. SBI card is also going to do extremely well when things open up. I think this card business is going to do very well, and SBI card has a huge chunk, huge market share in this space. So yes, hold on to it. If you don't have, buy incrementally, buy on bad days, keep on adding. I won't suggest buying into capital goods, L&T, Infotech, ABB, etc. It's not the time. Uh, Still, I still believe that consumer centric company will keep on doing well. Happiest Minds, a disclaimer, I have the stock. I think it's breaking out. I think there's a chance that could be headed toward 2000 in the next 6 months on Happiest Minds. Indian hotels, see, hotel stocks will keep on doing better. I won't say they'll do very well in the short run, but if you have a 2 year view, you can take some risk. You can buy at current levels. I won't say entry point can be given to you. What you can do is you buy 20-30% PS here, wait for a decline of 20% or an upside of 20% to buy more, add on to the stock, and hold 2-3 years will give you very good returns. Newgen, I've already talked about Mahadev. Once you can reverse the tape and talk about it, I am positive on the stock. L&T Infotech is a good company, but see, you cannot buy on for a short term. For 2-3 years, I think in 3 years you will see it up 50, 60, at least 60% from here. For short term, there could be declines. See, in the IT space, I'm very bullish for next 10 years. I'm very bullish for the next 2 years. But in the next 6 months, there could be a chance that the stock may decline, the stocks may do nothing, the stocks may consolidate. There's always a chance. But over 2-3 years, yes, these companies will keep on performing very well. Gloucester, I have to look, Vinod. I cannot comment, so I need to look at the stock only. Then I'll say. I talked about Muthoot Finance. You can reverse the tape and see it. Sheetal, thanks for your contribution. If you have any queries, you can shoot that to me. Thanks for your super chat contribution. Any queries, kindly send that to me. Okay. Amber, very good company. I think these are decent levels to get into Amber. On declines, buy more. There's always a chance of a decline, but around below 3,000, closer to 3,000, good levels to buy Amber. Okay. Midhani, I have to look. I cannot say. BSC is a very good long-term company to buy into, say 5-6 years. If you want to buy as an investment, yes, you can buy and just hold on to it. Straight Path, thanks for your Patreon membership and the way you're supporting there. Thank you. I won't get into a jute industry or a Nitin Spinners or into all these textile companies. Yes, PLI scheme is coming. Yes, there could be a huge up move. But as I explained about the PE factor, the PE may expand for a little while and may contract later on. I think get into good quality consumer companies will make you money. Bajaj Consumer from a 3-4 year point of view is good, but at the moment I feel that the numbers, I'm not very convinced with the numbers. There could be a chance that the stock may fall and that will be opportunity to buy. All right. 3M India, again, a very good portfolio stock. So all these stocks like Asian Paints, Pidilite, 3M India, DMart, MRF, and many other, TCS, Infosys, and the larger company, all these are 5, 6, 7, 10, 12, 15 year horizon stocks that you just keep on holding long term and make money. Prince pipes can be added here. I think from October, November onwards, you'll see the surge happening. I think you can buy here and but keep some money for any chance that if the stock falls, you buy more and accumulate. I think in 6 months, you'll see the stock higher by at least 20 to 30%. Move could be possible as the rainy season go away, the monsoon go away. All these pipe companies will keep on doing well. Even Astral will do much better, say going forward. All right. So me too. I think chemical companies are expensive. I would say it's a very good company from long term. So if you have it, don't sell. If you don't have it, don't buy. That would be my suggestion. Okay. Walaikum salam. Walaikum salam, Nabila. If you have any queries, you can shoot that to me as well. Sheikh Abdullah, Balkrishna Industry is good. I think Balkrishna is a better pick compared to MRF at these valuations. Go ahead and buy into, say, a Balkrishna from a 2-3 year point of view, should end up doing well. IRFC is a sell. IRCTC on declines below 3,000 is a buy, or after split below 600 is a buy. Glenmark Pharma is an avoid. I think there are better pharmaceutical companies that you can buy into. IRCTC is a buy below 3,000, as I explained. If you have it, hold on to it. It's heading to 5,000 over the next 18 months. Yeah. A Tata investment, I don't have any comment on it. probably get into the bigger, larger, better Tata companies rather than Tata Investment. Something like Tata Consumer also it looks good even now. Viniti Organics is good from a longer term point frame. Again, all these chemical companies have become expensive, so kindly take that to note. All right, guys. Thank you. Thanks a lot for being online, and kindly do subscribe to my channel. Hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Subscribe to my channel for sure. Would help me grow on YouTube as well. Thank you.